Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, natural resource specialist at the Oxford Club. His website, energyandresourcesdigest.com. Welcome back to the show, Sean.
Thanks for having me on.
The Canadian dollar, of course, this time of year, we're always watching. We don't want to have to pay $8 for a cauliflower like we did last winter. But is the Canadian dollar actually stronger right now, or is it a case of the U.S. dollar being weaker?
Well, we have seen a slide in the U.S. dollar since January 3rd. This is something that we saw silver and gold actually anticipate, and so they started moving higher. But we are seeing the U.S. dollar drop. 2 weeks ago, we had President Trump. He wasn't quite president then, but he was speaking about how China was a currency manipulator, and so that actually sparked kind of a move lower in the dollar. This time, we had his advisor, Peter Navarro, say that the euro was grossly undervalued. And so that makes people think that the White House is going to take an active hand in moving the U.S. dollar lower and against the euro, potentially against other currencies as well. And so this is putting more wind underneath the rally that we're seeing in precious metals. In gold, it actually began in mid-December. In silver, it began a week later. And things seem to be going along swimmingly. So my word to investors, and I think most of your subscribers probably have gold miners of some sort in their portfolios right now. Look at them and see how they're behaving. If they're not moving higher with the metals right now, you might want to rotate into something else that is. Because I'm not saying we are going to get the same kind of trend we had last year, which lasted through the end of June. But if we get anything close to it, the moves in the really leveraged stocks could be quite extraordinary, and you'll certainly want a piece of that.
I've noticed the Dow has taken quite a dump from its record high. Was that just setting people up for disappointment? Well,
I mean, it isn't down that much in the big scheme of things. And sure, too much optimism was in there because the Trump White House is promising a lot of things, and they can probably deliver on things like, slashing corporate taxes, rolling back EPA regulations, this, that, and the other. And so that makes many people think there will be a nice tailwind for the earnings of U.S. companies. But at the same time, when they do things like, restrict the people who can move into the country and stuff like that, and there is an element of chaos in that, and the market doesn't like chaos at all. And so, you see things actually sell off. Nothing goes up in a straight line anyway, and so, we know that this market had to ease off at some point. And since it was the White House that was pushing it up, naturally it's probably going to be the White House, letting some of the air out at the same time. But the proof will be in the earnings. See how those things work out. The economy seems to be moving along nicely. We have some nice manufacturing numbers in Europe, in the U.S., in China. So you look at those things, and I think that, we could have good earnings. It would really take a major incident, some kind of trade war or something, to actually, impact the earnings in a meaningful way. That doesn't mean we can't have a trade war. I would hope, though, that the cooler heads around the world would prevail, and we wouldn't have that kind of thing.
Who would win in a trade war anyway?
Oh, well, the consumers usually lose. If you're speaking about things like imposing taxes and tariffs on imported goods, well, who pays those? The consumers pay them because they're passed along to consumers. So that's never any good. Jobs can be threatened. It all depends on how severe a trade war gets. Will we have a trade war with Mexico? I don't know. I don't think anybody in Washington knows at this point. So far, it's been a lot of bluff and bluster, and I do think they will actually build the wall, but that doesn't mean a trade war. It's just really good news for companies that build walls. So we'll have to see how things work out. And certainly once Trump has his cabinet in place, Tillerson, who's going to be Secretary of State, is a man who loves to make deals, and so we could definitely see some good news follow the bad news. So I wouldn't get too upset at this point. Wait and see what actually happens. That said, Trump made a lot of promises on the campaign trail, and it looks like he's aiming on fulfilling all those. So one thing you might want to do is go back and look at a list of his promises and see how they might affect positions you own or else stocks that you might want to own. And just take that into account as well.
Well, don't forget, Carl Icahn rushed out of the Trump victory party to go and stock up on what he thought would be in the biggest demand.
Oh, really? I didn't hear that. There's so much news coming out of Washington that we're just getting overwhelmed at this point. I mean, there are marches in the street and stuff like that, and so there's all sorts of things going on. They're having hearings for the major cabinet nominees right now. I expect they'll all get through, despite strong opposition, simply because the Republicans have the votes. They control both houses of Congress. Therefore, not only will those get through, but any laws that like President Trump wants to pass will also get through. And he wants to roll back regulations. That will happen. Plan on that happening. That will make it easier for, say, companies in the oil and gas industry to make money because they'll have less regulatory oversight, and so they'll have to spend less money being in compliance with that. So that's just an obvious thing there.
Well, I'm looking at the big oil spill from a pipeline near Dallas. Apparently, though, regulations wouldn't have made any difference because a construction company hit the pipeline. I guess they didn't check the map.
Right. And so, there's that. But also, short of a nuclear meltdown, I don't expect the Trump administration to take any regulatory action on the environment, period. They have indicated this is an area where they really want to roll back regulations because they believe that it's choking economic growth. Therefore, we are really going to see the pendulum swing in that direction.
So can you hope the skies of the U.S. will look like Beijing in the short-term future?
I'm not hoping that at all. I mean, for one thing, I have to breathe the air and drink the water here. But I'm just saying this is what I expect. I'm not talking about things I hope for. It's what I expect to happen. What I expect to happen is Trump is going to get his way, and there's no one to stop him.
And I guess sales for things like gas masks and water purifiers will go up.
Oh, now you're being really pessimistic. I own a couple water purifiers, though. Maybe we'll see if I get a chance to use those. Seriously, though, I don't think that is, something I will have to do. It's just that, there's a lot of regulations they are going to get rid of, whether for good or ill, and so that will have an effect on certain companies, and people should start planning for that.
And even though coal, again, in the U.S. is hot, natural gas is replacing coal for the big power plants.
Oh, yeah. Natural gas is huge. I am invested in natural gas, so I'll be talking my book here. But I think, at least for the next 10 years, it's just going to be huge. The next thing after that, and one thing people might want to look at, is energy storage. These huge battery things. They just built 3 of them in, California. And, they hold so much more energy than you can possibly imagine. And it's energy that'll be generated by wind and solar and then stored in these things, these huge battery arrays. And then, they'll just put that out as they need to. That's the next step of the future. That's the next thing coming. And so we could see some big movement there. There are companies involved in that, and they could make a great deal of money.
Well, in BC, that would be great news for people who want to make power from tidal sources.
From what?
From the tides.
Oh, yeah. I mean, I live in Florida. They're always trying to get tidal power going off the coast here. And, they talk a great game, and they put things out there, and then they break. Because the ocean is just a monster when it comes to destroying equipment, isn't it? I mean, it just really is brutal. And so I would love tidal power to work. That would be great. Let's just see them do it in a way that's actually economically viable.
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Sean Brodrick. Sean, something that maybe we haven't looked into lately, lithium prices, where are they going?
They are going higher. And lithium stocks, I put out a report a while back for Oxford Resource Explorer folks, which is on small lithium companies, and those things are ramping up, doing very nicely. We have a large lithium company that's also going higher. And there was supposed to be a surplus this year. We haven't seen it yet. That's because estimates of demand and actual demand keep cranking higher and higher. Just the demand from Asia, China in particular, but not just China, is just enormous. Again, they can practically see the air that they're breathing over there. They know they want to do things differently. And so they're really making huge strides. And so there's some tremendous amounts of demand for that, for lithium, but also nickel. I mean, there's a tremendous amount of nickel in a lithium-ion battery. There just is. And so, so that's like, something else that you'll see, rising in price. Actually, we saw nickel have a nice 2016. Then it really, fell back on anticipation of new production out of Indonesia. We've had that supply hit the market, and so the bad news might be priced in. You have to be careful, though. So I wouldn't go whole hog on that. But some nickel miners, which are already doing well, could do extremely well this year. And then, of course, there is cobalt, which, they don't make a lot of it, and it's also in those batteries. So there's a bunch of different ways you can play this. One thing you can look at is a nice battery maker. I mean, certainly a Tesla isn't the only company building one of these huge gigafactories. They're building multiples of them over in China. And there are battery companies that will do extraordinarily well in this environment because they are making the batteries that everybody wants.
And one of our sponsors has a patented technique for recovering materials from batteries as well.
Really? Well, I will have to check into that. There are new techniques out in the lithium fields, as a matter of fact, which are boosting recoveries and like stuff like that. It's all very exciting. For a long time, it seemed like tech went to sleep in the mining industry, and now we are just having a tech renaissance in mining. And it's just amazing when you see what like a Barrick Gold is like actually doing with its mines in Nevada right now. They brought Cisco in there to optimize the mines and really make things just super efficient. And it's a technological leap that will probably pave the way for a lot of other miners to follow once they see what Barrick can actually do, if they can do it. Of course, they're doing this mine optimization stuff now. I expect, though, that it will work. It's not like an unknown technology. It's just that this is the first time someone actually puts it to work in a mine. So I think there are some exciting times that are coming in the mining industry because of things like that.
What is happening with nickel? Is there some kind of a scandal connected to it?
Not a scandal. The two big international nickel suppliers besides Russia, yeah, we can talk about that. But we had the Philippines and we had Indonesia. First, Indonesia actually banned exports of the lower grade nickel ore that it produced because it wanted that smelted in like Indonesia. And so that was the first good move for like nickel because that took supply off the market. Then the Philippines closed a bunch of mines. At one time, I think they had up to 30 that were either closed or under threat of closure. Now it's like 10. But in any case, that happened at the in like November, was it September, November, along there last year, and so that took some supply off the market. So prices went, much higher because of that, because they're using so much nickel for not only lithium, but of course stainless steel. That's the big use of it, right? And they're using so much of that over in China and stuff. And so, but then in January, we got hints that that Indonesia was going to open up its like exports again, and sure enough, they did. And there's one Indonesian company that has a huge supply. They'll be selling that in the market, and so that sent prices back lower. But now, I think we're at an equilibrium because we are just getting all these reports from analysts around the globe talking about how much is going to be needed for stainless steel because the economies are improving in China, Europe, and the U.S., and also for the lithium-ion batteries. And they're adding things up, and, like, demand just looks tremendous. So I think we could see some supply-demand things there. Not really a, like, real gap, though they are expecting that mines won't produce quite enough this year, so we'll have to take more out of supply. But we'll see supplies go lower this year when, for a while, many people were not expecting that. And so, that's actually kind of bullish for the nickel market right now.
What about copper? I've seen over the last few months, it has skyrocketed.
Yeah, and then it, pulled back, and now it's looking good again. Again, this is the improving economies in China, in the U.S., especially when they're talking about infrastructure build-outs. China, by the way, has an ongoing infrastructure build-out. It looks like the ones that we're talking about in, the U.S. makes it look like small change. And they need a lot of copper and aluminum and what have you for that. And so that's huge. That's ongoing. And but it seems like they're trying to crank up more and more because they have a lot of things that they're working on. And so, yeah, it seems like we had a slump for a while, but now we see economic improvement around the globe, and that's just pushing up demand for these metals. Now, if we get a trade war, all this is off the table, by the way. I mean, because we don't know what a trade war will do. Maybe it'll help companies in, certain areas. Certainly, many people are looking at U.S. steel manufacturers now because President Trump is speaking about only using U.S. steel in the new infrastructure projects. I don't know if he really means that, but he seems to actually follow through on these things, so I would take him at his word for now. And so U.S. steel companies look quite attractive in these situations. So if we get a trade war, that's going to upset the whole table, and it'll be hard to actually predict. But if we don't get a trade war, then we are going to see continued rising demand for all these metals, and it'll be a great 2017.
What about the demand for oil?
Well, things seem to be tightening up there. Now, in fact, I was just reading some good stuff from John Kemp, who's from Reuters, and he's definitely on the ball about this stuff. And he was saying that we are going to see more and more demand coming along, and so that's really going to tighten up the supply-demand thing. My response to that is part of global demand is China building up its oil stockpiles, right? So if they stop doing that, that's going to be a wrench in the works. But if things continue going the way they're going, and there's nothing to say they won't right now, then we will see oil prices tighten up, and we could see $60 oil quite easily this year. That could actually happen. But just remember, the higher prices go, then the more incentive there is to produce, and there's a whole lot of wells around North America that were drilled but not put into service, and those things could be opened up rather quickly, and so that could bring a bunch more supply onto the market. It'll be good for the oil and gas services industry, certainly, and in fact, I was just reading some stuff from those companies today, pretty much chortling about what they see going on in this quarter. They are definitely getting the phone ringing off the hook at this point. But there's so much surplus in that business right now. I mean, they aren't getting back to like where they need to be yet. But they see this demand ramping up, and it's really, really good for them. Will we ramp up so much supply that it upsets the oil supply-demand balance again? I don't think that's in the near-term future. If we get to $60 oil, then we're going to have to talk, because that kind of thing could happen. So we'll just see how it goes.
Sean, thank you so much for chatting with us.
Thank you very much for having me on. And I hope you put up that chart I sent you, because that's an interesting look at what's going on with the U.S. dollar, silver, and gold.
You can really see the jaws right there on the right-hand side of the chart.
Yeah.
Where everything's closing in. My guest has been Sean Brodrick, natural resource specialist at the Oxford Club. Check out his website, energyandresourcesdigest.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.